Feeling overwhelmed by investing? You are not alone. Stocks, bonds, crypto, it's a maze out there. And everywhere you turn, experts are pushing the next hot stocks or promising unrealistic returns. Tired of wishy-washy advice and empty guarantees? What if I told you there's a simpler way? A strategy so straightforward yet so powerful it could set you up for life using just 3 ETFs. I'm Maurice and I'm about to share a method backed by decades of data all the way back to 1957. No expensive advisors, no complex schemes, just a proven approach you can implement yourself. So here's the math. Investing $500 a month for 30 years with an average annual return of 10%, which is the historical average of the S&P 500, you would end up with approximately $1.1 million. And I'm going to show you how to potentially do even better than that. Sounds too good to be true? Wait, because I thought so too, until I implemented this strategy in my own portfolios and those of my clients. And the results were staggering. Now I'm sharing this game-changing approach with you for free. Stay tuned because this could be the last investing video you will ever need to watch. So today we're diving into the world of 3 ETF portfolio, the most effective, easiest and fastest way to build lasting wealth. And importantly, this isn't just another investing strategy, it's a financial revelation. So let's rewind to the 1990s. While I was perfecting my finger painting skills, investing legend Jack Bogle was creating the original 3 ETF portfolio. But here's the kicker. Now it's 2024 and just like my fashion sense, the investing landscape has evolved. And we are about to supercharge Bogle's strategy for the modern era. Before we dive in, let me ask you this. Have you ever felt overwhelmed by the complexity of investing, the endless options, the confusion jargon, the fear of making a mistake? Well, you are not alone. But today that all changes because you have the power to take control of your own financial future. With just 3 simple steps, you will be on your way to outperforming 90% of professional investors. And yes, you heard that right. 90%. So let's break it down. First, what is exactly an ETF? Think of it like a buffet restaurant. For one price, you get access to a wide variety of foods. Similarly, an ETF gives you a diverse range of stocks or bonds in a single investment. It's simplicity and diversity all rolled into one. Now, here are the 3 golden rules of our updated 3 ETF portfolio. Number 1. Choose one ETF for each category and keep it simpler than your coffee order. Number 2. Set a clear investing goal, growth, income, or both. You decide. Number 3. Stay the course. Your portfolio is like a fine wine. It gets better with the time. Pay attention because this is where it gets good. Here's the key. Our new 3 ETF portfolio consists of 1. A foundational ETF, number 2. A dividend ETF, and number 3. A growth ETF. Let's dive into each one. Number 1. Foundational ETF. This is the backbone of your portfolio. We are talking about ETFs like Vanguard's FU or VTI. These track the S&P 500 or the total US stock market. They have historically returned about 10% annually since 1957. That's the power of following the entire market. Number 2, dividend ETFs. Instead of bonds, we are using dividend ETFs for steady income and safety. Look at ETFs like SCHD from Charles Schwab, VYM from Vanguard, or the DGRO from iShares. These typically yield 2 to 3% in dividends plus potential for growth. It's like getting paid while money grows. Number 3. Growth ETFs. This is where we turbocharge your returns. Consider ETFs like QQQ, SCHG from Charles Schwab, or VUG from Vanguard. These focus on high growth sectors, often tech heavy. They are the rocket fuel in your portfolio. Now, you might be thinking, this sounds great, but how do I put it all together? So here's a simple allocation to get you started. 50% in your foundational ETF, 30% in your dividend ETF, and 20% in your growth ETF. But remember, this isn't one size fits all, adjust based on your age, risk tolerance, and financial goals. So you have the power to customize this strategy to fit your unique situation. That's the beauty of this approach. It's flexible yet powerful. So let me share something remarkable. Two of my clients implemented this strategy just last year. The results? Astonishing. Here's the key. Not only did they outperform their previous complex portfolios, but they also reported feeling more confident and more in control of their finances than ever before. Now, let's talk about implementation. It's easier than you might think. 1. Choose a reliable broker, and there are many good options out there. Number 2. Set up automatic investments. Why? This takes the emotion out of investing. Number 3. Dollar cost average. Invest regularly regardless of market conditions. Number 4. Rebalance annually to maintain your desired allocation. But wait, there is more. Let me share a secret from my years as a financial advisor. Many asset managers and banks are overcomplicating investing, making their clients think it's rocket science. But here's the truth. With these three foundational ETFs, you can potentially outperform 90% of the market. And why does this work? Because you are following the entire market, staying broadly diversified, and crucially, keeping your costs low. Remember this golden rule. The less you pay in fees to expensive managers, the more money stays in your pocket to grow over time. And that's why you can outperform all those gurus with this straightforward strategy. It's that simple, and I've seen it work time and time again. Now, I know you are thinking, is it really this easy? What's the catch? Well, let's address some potential drawbacks. Number 1, the stock market volatility. Yes, the market can be a roller coaster in the short term, but remember, we are in this for the long haul, right? Number 2, US market focus. This strategy is primarily focused on the US stocks. If you want more international exposure, you might need to adjust. But for long-term wealth building, this 3 ETF approach is hard to beat. And remember, the power of building wealth and retire early is in your hands. With this 3 ETF strategy, you are not just investing, you are building a bulletproof portfolio. But there is a problem. When selecting growth ETFs for the 3 ETF portfolio, the main challenges are finding high potential sectors and balancing risk and reward, right? So what's the best way to go? That's why I have this video. In our next video, the best 3 AI stocks that will boost your wealth fast, we are diving in the cutting edge world of AI investing. It's like the gold rush of our time. And if you believe AI is the future, you can make some serious returns of 35% each year.